Oh my god, Shiba Inu has just done the impossible. We've officially broken free from a multi-year downtrend that lasted for 728 days. The big question now is, could this finally be the start of the long-awaited bull market? Let's dive into what's happening. Disclaimer. Shiba Inu continues to show strong resilience above a critical support level, a signal that the token might be preparing for a potential upward breakout. The broader crypto market is buzzing with renewed optimism, and investors are eyeing this moment closely. But what's making this particular move so exciting? When a Shiba Inu bull market begins, it marks the start of a sustained period of price growth, driven by optimism and growing investor confidence. For holders of SHIB, this means more than just numbers on a chart. It represents the chance to see the value of their tokens increase significantly, potentially bringing substantial profits. With more trading activity during bullish times, liquidity improves, making it easier for investors to buy and sell without large price slippage. Beyond financial gain, a bull market brings a positive shift in sentiment. Optimism spreads quickly across the community, creating a ripple effect that attracts even more new investors. As confidence builds, people begin to see Shiba Inu not just as a meme coin, but as a serious project with long-term potential. This enthusiasm fosters growth across the ecosystem, encouraging new projects, listings, and partnerships. From a portfolio perspective, Shiba Inu's rise contributes to the diversification and overall growth of crypto portfolios that include SHIB. Long-term holders and early adopters could finally see their patience pay off as the token aims for new all-time highs, offering impressive returns on their initial investments. The excitement doesn't stop there. Whenever a coin like Shiba Inu starts to trend upwards, it tends to attract attention not only from retail traders but also from major players, whales, and institutional investors. That visibility and renewed confidence can accelerate growth within the Shiba Inu ecosystem, leading to more exposure, more users, and stronger fundamentals. And speaking of whales, this latest development has triggered a massive wave of whale activity. Recent data shows that Shiba Inu whales are on an aggressive accumulation spree. One particular whale made headlines by pouring over $50 million into the crypto market in just one day. Within 24 hours, this investor made several huge purchases, including 10,000 Ethereum worth around $20 million and 60,000 BNB worth $13 million, all withdrawn directly from Binance. Among the whale's top holdings, Shiba Inu ranked as the third largest, with an astonishing 300 billion SHIB tokens added to their wallet, valued at approximately $2.5 million. What's fascinating is that this whale only became active earlier this year, around June 8th, and within just 17 weeks, they managed to accumulate a portfolio worth roughly $53 million across multiple digital assets. The big question everyone is asking now is, what does this whale know that we don't? Could there be something major happening behind the scenes that hasn't been made public yet? Should retail investors take this as a cue to follow the whale's lead and stock up on more Shiba Inu? Let's explore this. When a crypto whale invests heavily in a short amount of time, it often sends a subtle yet powerful message of bullish sentiment. Whales are not your average traders. They have access to advanced analytics, insider-level market research, and deeper insights into potential catalysts. Their decisions are rarely impulsive. Instead, they're usually based on detailed evaluations of market conditions, price cycles, and emerging developments. A whale's large accumulation typically signals confidence in the asset's long-term potential. They tend to buy during undervalued phases, strategically identifying price zones where they believe the market is mispricing the asset. By purchasing in bulk during these dips, whales not only position themselves for future profits but also drive up demand, subtly influencing the market in their favor. Timing is everything, and the timing of this whale's purchase hints at a positive outlook for the months ahead. When whales act, the market pays attention. Their moves can attract other investors who interpret these actions as early signs of a major rally. This herd behavior can amplify buying pressure, leading to momentum-driven price increases. Whales also typically have a long-term mindset. Unlike day traders who seek quick profits, whales hold for months or even years, believing in the token's growth potential. This patience often pays off handsomely, especially when new partnerships, ecosystem updates, or burns boost the token's value. However, Investors should approach whale activity carefully. While it can be a bullish signal, it's not a guaranteed indicator of future success. The crypto market remains volatile and unpredictable. Just because a whale buys doesn't mean the price won't dip again before rising. It's essential for investors to do their own research, analyze trends, and manage risk wisely before making any decisions. Still, this particular whale's move seems intriguing. It's possible they're acting on early knowledge of something big, perhaps a major partnership, a new exchange listing, or a system upgrade within the Shiba Inu ecosystem. Some might even suspect insider trading, which is a serious and illegal practice in the crypto space. Insider trading involves making trades based on material, non-public information. In simple terms, it's using secret knowledge that's not available to the public to gain an unfair advantage. It undermines fairness and transparency in the market, giving some individuals an edge at the expense of everyone else. Regulators like the U.S. Securities and Exchange Commission, SEC, have made it clear that insider trading laws apply to crypto markets as well. When caught, individuals or companies engaging in this practice face severe penalties, including fines and bans. While detecting insider trading in crypto is more difficult due to the decentralized and pseudonymous nature of blockchain transactions, authorities are becoming more vigilant. Exchanges and blockchain analytics firms are now working closely to monitor suspicious activity and ensure market integrity. That said, not every large transaction is insider trading. Some investors simply follow data, trends, and patterns. Many traders watch whale wallets precisely because these movements often signal confidence in a project. Blockchain transparency allows anyone to track transactions, so following whale behavior has become a common part of crypto analysis. When a whale buys, it often sparks conversations and speculation. Could they be preparing for a major announcement? Is there an upcoming event, like a burn, listing, or product launch? While the truth isn't always clear, such movements tend to inject excitement into the market and sometimes even kickstart short-term rallies. However, retail investors must be careful. Whales can manipulate markets, buying large amounts to trigger excitement and then selling after prices surge. Blindly following whales can lead to losses if their intentions differ from yours. The key is to use whale tracking as just one tool among many when analyzing the market. Now, before we wrap up, here's an interesting thought for all crypto investors. In the world of digital assets, investors are often compared to 4 types of sea creatures: sharks, octopuses, jellyfish, and dolphins. A shark is an investor who dives in quickly, promotes a coin heavily, makes profits fast, and exits before the wave settles. They move swiftly, are always strategic, and rarely get emotionally attached to any project. An octopus, on the other hand, spreads its reach across multiple tokens. These investors diversify their portfolios and promote several projects at once, minimizing risk through variety. They don't tie themselves to a single community and are constantly scanning the market for new opportunities. Then there's the jellyfish. These are investors with small holdings but loud voices. They often spread fear, uncertainty, and doubt, also known as FUD, within communities. Despite their limited investment, they can influence sentiment significantly, especially when acting in groups. Finally, we have dolphins. Dolphins are the influencers of the crypto world. They actively engage with communities, promote positivity, share insights, and collaborate intelligently. They help projects grow through genuine engagement, constructive dialogue, and social media presence. So, which one are you? A shark, an octopus, a jellyfish, or a dolphin? Comment below and let me know. I'd love to see how our community identifies itself. As we end this discussion, remember that the Shiba Inu ecosystem continues to evolve rapidly. With Shibarium development, token burns, and whale interest heating up, the next few months could be pivotal. Whether or not this marks the start of a full-scale bull market, one thing is clear: Shiba Inu is gaining momentum once again. If you enjoyed this video, please hit the like button and drop a comment below. It really helps with the YouTube algorithm. Don't forget to share this video with your friends and fellow crypto enthusiasts to spread the word about the incredible journey Shiba Inu is on. The next chapter could be bigger than anyone expects. Stay tuned for more updates, because the Shiba revolution might just be getting started.